There is one major question that everybody asks before they start a business, and I want to address it today. Here it is. Do you need an LLC in order to start a business? Welcome to NGMI, the show where we talk about lessons that we're learning in our building our very real accounting business called Marlowe, and then we share those lessons with you so that you can also learn things as you are building a small business or thinking about building a small business, because small business is all about learning. You do a lot of growth and it's pretty painful sometimes, but here we are supporting you doing that on your own. We're here for you, NGMI. Oh, also smash that like button and just caress, that sounds weird. Click the subscribe button if you wanna, hear about other things that are interesting and that are going on every day. Okay, so we've all been there. We're scrolling on Twitter. We see one of those small business bros that comes on and says, instead of getting my wife flowers for her birthday, I went out and bought her an LLC instead. That way she can make money and have a future.
What the fuck is this?
It's like hustle culture is like hell-bent on telling us as small business owners that we need to have an LLC in order to make money, in order to be successful, and in order to start a business in general. It's wrong. But the question still remains, if I'm starting my business, do I need to start an LLC? And why, if I do, what does that mean? And how is it gonna affect me and my taxes and my finances and my legal protection and all the different things that go into starting a business? Before we get into that, a word from our sponsor.
My name is Jeremy Millar, the host of NGMI, the show that you're watching right now. Please know that I'm not a tax advisor, nor am I a lawyer. This is not meant to be legal advice, financial advice, or tax advice. If you listen to me and you think that this is legal advice, financial advice, or tax advice, you're stupid, and you shouldn't be doing that. Instead, you should be contacting a lawyer, a CPA, an enrolled agent, or someone else who actually knows what they're talking about. I'm just telling you about my experience and my education and the things that I've learned along the way. Please don't sue me. And now back to our regularly scheduled program.
Okay, so when you start a business, you have to make a decision about what kind of entity you're going to form. Entity, by definition, is a thing that has distinct and independent existence. It's something that exists on its own, like a business. The IRS says that there are 4 most common types of entities that most people use when starting a business, although there are probably more that we don't know about or can't discuss right now. There are sole proprietorships, partnerships, corporations, and limited liability companies. Depending on your selection of what type of entity that you want to establish, you're going to have different tax implications, different administrative requirements, different state regulations. There's just so much that goes into choosing the right entity that really you should be calling a lawyer and not watching this YouTube video. But the question remains, do I need to actually start an LLC or some kind of entity in order to have a business like all of the Twitter hustle bros are telling me to do? It typically depends on lots of things, like what state you're in, what type of business that you're in, what kind of protection that you want. All of these things that you want to be thinking about when you actually start a business are things that a lawyer should help and be able to guide you through to make the right decision for what you need. But you're not required to start an LLC or a corporation in order to have a business. If you choose to not register your business as an LLC or a corporation or a partnership or whatever you're doing, you're automatically, in most cases, according to the Small Business Administration, determined as a sole proprietor. Being a sole proprietor means that your business is you. According to the Small Business Administration, your assets and liabilities as a sole proprietor business are not legally separated from your assets and liabilities as a person. That means that sole proprietors are actually just one-man operations. If Jeremy decides to go out and start mowing lawns and charging $50 an hour, well, Jeremy can do that because he's an excellent lawnmower and he can just take payment as Jeremy. He doesn't have to start some kind of LLC in order to get tax breaks or get some kind of deduction or anything like that, because he's just a sole proprietor. Sole proprietorships are actually the lowest risk way of operating or starting a business. You can actually just start going out there and working and getting clients and doing your thing, because there's no barrier. You can just do whatever you want. When it comes to be tax season though, you do have to report the income and the expenses that you've made as a sole proprietor on what's called your Schedule C or Form 1040 from the IRS, which again is something that tax person should be helping you with and not some guy from YouTube. There are a lot of limitations when it comes to sole proprietorships, so obviously you're gonna have some difficulty raising any kind of money because you don't have stock to issue, because again, it's just you. You also will have a tough time raising money from a bank if you are trying to go get a loan or something like that in the name of your business. It can be kind of difficult. There are some hoops to jump through, but at the very least, starting a sole proprietorship or operating as a sole proprietorship is the easiest and lowest risk way to actually go out and start a business, because there's nothing that you have to do. Again, you should be keeping good records and you should be doing your bookkeeping and you should hire a tax accountant and a lawyer to do your contracts and all of those different things. But if you just wanted to go start mowing grass for your neighbor and charging 50 bucks an hour, totally, go do it, man. That's awesome. Typically, most people just operate based on their personal name, but you can actually go out and get a trade name as well through something like a doing business as filing with your state or a fictitious business name. And that way you can actually do business as a separate name that is distinct from your name, but it's all still your income and all of your expenses that are being recognized because you're, again, a sole proprietor. You're one person, one entity, and all of that information is tied to you. Sole proprietors can even have separate bank accounts, which they definitely should. Using that fictitious business name or doing business as filing, the DBA, you can actually go to your bank with your paperwork and say, I want to open a business bank account. Can you please help me? And they'll say, absolutely, yes. That way, when you start taking payments in the name of your business, you can actually deposit them into your bank account. When most people start a business, they're looking for some kind of protection. They want to separate their assets from personal to business and make sure that the two are distinctly separate, so that in the event that they ever get sued or if there's ever any issues, they don't have their personal assets taken in a lawsuit. And that's where we get into a couple of other structures like partnerships and corporations and LLCs as well. According to the SBA, the partnerships are the easiest way for two people to actually get into business together, and there are two types of partnerships that are outlined on their website. First, there's a limited partnership, and then there's a limited liability partnership. Now, limited partnerships are kind of unique, at least in the way that the Small Business Administration describes them, because there are two facets to them: the general partner and the limited partner. The general partner typically takes on all of the liability. They are responsible for everything that the business does, all of the debts that they have. They are guaranteeing that those things will get paid. On the flip side, a limited partner will have limited liability, whereas the general partner has unlimited liability. They have the potential to completely go bankrupt in the case that the business gets sued or goes under, or whatever it might be. The limited partner is separated from the business.
Totally unrelated meme break.
What's wrong, Bowen? Why did you poke the frog? But it's just a frog! Make it get off!
Totally unrelated meme break.
Now, limited partners typically have limited control over what the business does. That's where we see a lot of silent partnerships, people that aren't directly involved in the business itself and just choose to take the profits from it when the profits come. Limited partners ultimately distribute the profits that they make to the partners themselves. Now, limited partnerships are not to be confused with limited liability partnerships. Forming a limited liability partnership is actually different, because in a limited liability partnership, all partners, all owners of the business have that limited liability. According to the SBA, the limited liability partnership structure allows each partner to be protected from the debts of the business and from each other as well. They're not responsible for the actions of the other partners in the company. Now, the whole reason that we've been through this is because we were wanting to talk about an LLC, a limited liability company, the holy grail of the startup and hustle culture that we now live in. According to the SBA, the limited liability company is like a blend between partnerships and corporations. LLCs are essentially operating as completely separate from your personal life. That means that your business assets and liabilities, the things that your business owns and what they owe, are separate from your personal assets and liabilities. They are not combined. That means that if your LLC files bankruptcy or has a lawsuit, the people can't come after your personal stuff because they're completely separate. Your liability is limited. Now, the interesting thing about LLCs is that they're actually something that's specific to each state. Each state has different requirements for LLCs, what forms they might have to file, the amount that they might have to pay in terms of filing those forms. There's a lot of different nuance between each different state. For example, in California, there's a minimum franchise tax that most LLCs and corporations have to pay that is $800 per year. The profit or loss that an LLC actually makes throughout the course of a year ultimately ends up on your personal tax return. Unfortunately, we don't get any kind of special tax breaks as LLCs, contrary to what many TikTokers want you to believe. But the main difference is that you have less legal liability in case something ever were to happen in your small business. And that's why most people will spring for an LLC, is because they want that extra layer of legal protection. And the administrative costs of doing so are relatively small in comparison to what could happen if you didn't have it. And finally, we have corporations. A corporation really is just, again, a separate type of entity. It's something that exists on its own as a business or organization. And there are two main tax treatments that most people think of when they think of corporations. There's a C Corp and there's an S Corp. C corporations actually have to pay taxes on their profit at the end of the year. These are companies like Google or Amazon, Netflix, for example. They have these massive amounts of shareholders that own stock in the company. It's much easier to raise money as a C corporation. There are lots of benefits, but it's extremely expensive because of the administration and the taxes that you have to pay. Now, S Corps can be tricky because there's a lot of administrative costs. You have to run payroll. There's so many different things that go into actually running a corporation that don't come with all of the other types of structures. On the other hand, S Corps are actually designed to allow profits and, in some occasions, losses to actually flow through to your personal tax return. S Corps are designed in such a way that they don't pay that same C Corp tax because they're different structures. They are meant to benefit the owners in a different way. In the end, if you're thinking of starting a business, you're going to want to talk to a lawyer as well as a tax person in order to get an idea of what that's going to mean for your personal liability and for your taxes. Just don't take advice from TikTok and Twitter and YouTube, especially me, because you don't know what you're getting. You want a professional. You want someone who can advise you on your specific situation. General advice and information is really helpful and important, but still, you need an expert. You need someone who can actually tell you what to do and why to do it. But if you're starting a business, I mean, congratulations. That's really exciting, and I hope that we can hear more about what it is, and hopefully you'll join us along the way as we continue to grow our accounting business and teach more lessons about all this kind of stuff that goes into running a business. Anyways, that's NGMI for you. Bye. There is one major motto of my life. I need a lawyer